The euro and the US dollar are equal. The last time that happened was 20 years ago. This is in the wake of Russia's threat to cut off gas to the West. Some experts are already saying that Europe is in a recession. But how exactly would that affect us? Well, Greg McBride, the chief financial analyst with Bankrate, told Forbes that this could potentially help businesses and in turn help us ease out of inflation. Specifically, businesses that import goods from Europe will find their supply chains becoming more affordable. Transportation companies that purchase European cars and trucks will benefit by adding to their fleet at a reduced cost. Similarly, airlines that buy their planes from Airbus or other European aircraft manufacturers will do so at better than usual prices. This can help boost the profit margins for these firms. Transportation companies that purchase European cars and trucks will benefit by adding to their fleet at a reduced cost. Similarly, airlines that buy their planes from Airbus or other European aircraft manufacturers will do so at a better than usual price. This can help boost the profit margins for these firms. With the two currencies in parity, it could help companies earn more profit when using either currency in either country. And this is, of course, encouraging for the US. The second layer to this is the consumer. European products would become cheaper. From fine wine to German cars, it's more affordable now. And that will balance the rising cost of everything else. The travel industry will feel the effects the most. It will be cheaper to travel to and around Europe, which sounds amazing, but don't get too hasty. There is a bad side here. Travel-related businesses in the US will be more expensive for Europeans. That could discourage travel to the US. More importantly, US companies that trade with or export to Europe will find their revenue going down as US products become more expensive. And that's a huge chunk of the business. In 2020, the US's largest export to the EU was aerospace products and parts at $35.7 billion. That was followed by mineral fuels worth $28.9 billion and machinery worth $26.4 billion. Not to mention blue chip consumer brands like Coca-Cola, McDonald's, and so on. Unfortunately, this won't be the last of our burdens. Although it's Europe that's having problems with their currency, Asia could follow suit, and that's a bigger problem. We send over 26% of our total exports to China, Japan, and Hong Kong. If anything happens to their economy, that's 26% of our economy that could be affected. This situation proves that we are strongly connected and we are strongly global. The activity of major world economies affects us, and it has to stop. What our government needs to do is look for a way to restore the dollar's dominance and minimize vulnerability to foreign economies. This is going to take more than just increasing interest rates. We need to do some major reconstructing and totally rethink how we approach our position in the global economy and how we look at our own. We need to be less dependent on other countries, especially when it comes to essential supplies. We are dependent on Europe when it comes to iron, steel, organic chemicals, pharmaceuticals, electrical machinery, and so on. And then there's oil. We're dependent on the Middle East for that. We should also re-examine our trade agreements. Our current agreements put our exports at a disadvantage. Back in 2020, the EU and the US battled it out in court over tariffs. In the end, the World Trade Organization favored the EU and ruled that they can add up to $4 billion on American products arriving for sale in Europe. We all need to shape up, and we need to shape up fast because America is dipping into another recession. And when other countries also dip into recession, it will affect us even more. Let me know what you think about our trade agreements in the comment section below. This has been Anna Kate with Noble Gold Investments.